on the indexes are at 0.
Okay, and you're selling off 367 points on the Dow. Here's that S&P, Tom.
Fixes are at 100.
I'm at
Google at 7.
1,153.70. What's the formula? What's the next lower formula?
1149.
Okay, and we have that placed in there, so let me know if it hits 1149 on the S&P.
10%
All right,
Google.
NASDAQ comp, we're going to get sold out. We're going to capitulate it. The time is 7:36 a.m. Pacific Standard Time. The contracts that we're trading, and here's the S&P 3-minute chart. I'm going to move this out of the way. And what we're doing is we're going to put lows in here on these contracts now. As we capitulate.
Lower.
Indexes are all at 0.
Apple's lower, 359.
Okay, so you made lower lows, and they're capitulating it. It's down $14 and something.
Google
Throw
at
in
1.
the 360 call. So when the 360 call makes the bottom there, Tina, you're able to get in on the action. Okay? Down 14 handles. There will be a bounce. The selling is continuing here, MMTs. So we're below the market on all of these contracts. We are down 376 handles. And this is everything that we talked about and all the training that we did over the weekend and everything we've done for the last couple of months is that the markets were going to go in this direction.
Down 282 on the Dow.
Yep, 379
S&P's
points.
at 0.
Google at 1, but it is holding its bottom.
Value.
Which
The
is?
calls are on the Google. They are holding value.
Okay.
They are still $1 above the low of the day.
Okay. And
Options.
is
Both
that
the
the
monthly and the
weekly?
weekly. Both
Okay.
the monthly and the weekly.
Here's the 560 call. Do you want me to go to that 550 call in the money?
I have the 570 and the 580. So
So I'm going to go to the 550 because
Got Google at 3, still holding the bottom 6.
we're holding these contracts on the bid over here on the 560 call at 10.
okay, Apple's bouncing.
All right.
NASDAQ bouncing.
Okay. All right. Goalie, throw one contract out here at 10 to 80 only.
Google 9%, Apple 14.
Throw it out there. We're bouncing off key indexes.
What's rolling
like you
over?
said. Throw it out there. Confirm the order. They're $1 wide. Now, let's
1080's out there.
All right. See? I said 1090.
I
You'll
heard
get
1080.
hit
It's
at
rolling
10,
over.
1090.
You
I'm
said
sorry.
1080.
I did say 1080. 1090. My fault.
You want it 1090?
Yeah, you got to raise it up 10 pennies above him as we're bouncing just to try to see if you can square and make the low of the day. So it's 1070. Get it out there. 1090's not showing.
It's out there.
I don't see it. It's not showing.
It's out there.
Okay, now they all came into play on this. Okay, now leave it there. All right, now cancel it and see if the 1070s stay or not, and then go back. Now go back to 1090 again and count to 3.
1, 2, 3.
Now take it off. You waited
It's off.
past 3 too long. So that way you're going to see if you get them to follow that bid, young man, and you did perfect in that. Now do it again. See how the people just
1,
printed?
2, 3.
I don't even see your bid out there. I see 1080s. Where are the 1090s? Here we are.
So we do
We're now
2 TDs up, 2
28.
TDs down.
There we go.
We're 349.
Opened above the 10-minute,
Okay.
holding it, bouncing it, staying above the 10-minute.
Well,
Here we go. Another.
printed. We were 1090 and could have got hit by 1120. They're up $1 off of the bottom. Okay, you bounced intraday in the S&P and the Dow.
Above
from the
35 on
lows.
the arrow.
Everything has got its bounce right now at 7:42 a.m. Today's date,
32
It's
on
amazing
Google.
what they do.
2011.
I love it. I'm long.
Yeah. This is how bottom capitulations get made, and this is why you're going to have that price action volatility, and this is how you steal the contracts at the low of the day. And same thing here on the S&P. He's got to make an adjustment to 770 now to get someone to throw. Why it's bouncing, you got to take up there. 770 is there. Now, let that stay there. So, this contract over here, it's finally not a wide canyon. It's 1340 by 1470 on that call with the 1240 low. So, as you're bouncing here, and this is how bottoms get. Each time that they come down and make those bottoms, they bounce, but once they bounce to that next near resistance level, If it starts to sell off, then you have to cancel the bids and we go back lower again. So for right now, the way that we're bouncing, and I'm watching this S&P get its first 3-minute, 6-minute bounce, that's why we brought this price up to 7.70.
Got 369.12 on all the indexes.
We're bouncing right now intraday. We're bouncing almost 100, well, about 70 handles here. We're bouncing in the S&P 3-minute chart here. The NASDAQ comp, boy, what a haircut. So they are, once again, trying to bounce. And we got this contract right here at 770 to create a market. Of course, we're going to want to scale in and get a lot more. But as we're putting bottoms in, they go up. And we're going to see when the distribution ends. We own the contract here. We're trying to create a market so that we can scale in on more. We are wholesale. We were very wholesale entry on the opening bell on the 560 call. That live video is already posted. MMT. Now it's a 1220 by 1270, and 1140 was a hook and a 17 was a high on the 560 call. They closed at 2475, and what a nice haircut to the wholesale entries down in here based on the amount of selling that we had in the opening bell. The time is 7:50 a.m. Pacific Standard Time, 8/8/2011. Once again, it's all about how do I get wholesale and sell back retail. And how do I understand the amount of downward selling pressure, which means that you hit a capitulation point on the sell side, it stops, and then that's when the calls are viable at their wholesale entries, as we are doing here. And on the S&P 1200 call, we're down 300 points on the Dow. The S&P made it an intraday low today, and the low is... this low right here was 1,154, and now we're currently printing up here on at 1,000. The low is 1,161 in that 3-minute bar. So we came down in our platform to our alerts, right, MMTs, right, Tom, right, everyone? So basically, now we're going to learn how we stabilize the market, because once we know where stabilization really holds, as it's trying to do for, it's struggled for about another 9 minutes, will be an hour and 30 minutes. Okay? And so at some point, we got to find that consolidation. Once we find it, then all the purchases and the calls are wholesale at that time. And we will get them wholesale based on when the sellers dry up and how to buy a $1,200 call. Now you got to remember that this call contract over here closed at $28, and the low is $12.40, and it's $14.20 by $16. They got taken to the woodshed. The people that own these calls got taken to the woodshed. And we got our wholesale bids out. $12.40 was a low. And learning how to buy that lower bid and being a market maker is you get that low, and then you're over here and you can work the ask. You can put it out at 15.10. You can narrow ranges. You can get hit and take profits. We've already got the premier live entry on the opening bell doing that with the Google call. This is how it would be done. Now, when you stabilize, is that when you pull back, either you pull back to double bottoms on indexes and double bottoms on equities, but you don't make any more lows for the day. And we're going to know here in about 7 more minutes. We know. Here we go on this contract. You can see the amount of volume that came in and people paid up. SMF remains below the market of the day, getting wholesale prices. You can see very clearly here, 1,000 contracts at $13.85, 2,500 contracts paid at $13.85. 1240 is the low. That's quite a spread from 1240 to 1385 on 2,500 contracts, 500 contracts, 500 contracts. So big buyers stepping in up here at these higher price levels. Granted, once again, that buying this contract closes at $28, but we remain our bids below the market, because each attempt that the S&P rolls up and it's rolling over. And people went in and they bought exuberant amount of contracts, and they're going to get taken to the woodshed.
The S&P.
As we can clearly see, we have bounced 100 points in the Dow on this videotape. And getting our option entries are paying off. And as we lever up, we're going to be selling them. The call on the S&P, we have tightened this one. It's 970. We are in at 770, 20 pennies off the low. Remember, they close at 17.80. Not only that, MMTs, we did wonderful work. We'll revisit this. I'll recap this right now. How to get entries in downside markets, when markets are going to turn and the reasons why they're going to turn, how to steal the wholesale bid on these contracts. Don't sell these at 10.10. Put them out there since we're bouncing. Put these contracts out at 10. They close at 17.80. Throw them out at 12.50. Okay? And keep your other bid there. Take this bid up to 8.10 because we are wholesale in the channel. And we'll see how this bottom holds right now in the Dow. Not only that, when we take a look at the type of move that Google performed here, it performed it when the 10-minute broke up above here, and in our platform here, everything was working on this bottom up, which also made the 560 call very nice entries to exits again. Remember, they closed at 24.75. The low was 11.40. They're well off their lows. How to steal the bids, how markets capitulate, how stocks eventually get the bottoms, what to do, how to get the entries, understand wholesale, understand how to work bid and ask in options, and understand how that when equities bounce from wholesale levels, that the call options bounce from wholesale levels. We've had over 100-point bounce off of the Dow. The time is 8:11. It's 11 minutes after the hour. 11:11 Eastern Time. 8/8/2001. What a wonderful trading day, MMTs.